Okay, here we go. We are live. Oh boy, what a day in the markets, ladies and gentlemen. Welcome back, investors, to Ticker Time News. I am Adam, and this is the place where smart investors come to learn and to have some fun and to look at some charts. And today, boy, it's a tough day to look at some charts, but we learned something. We learned something today. Remember, any failure that we ever have in our life, whether it's failing a math quiz or, not getting that driver's license test just right, or we start that business and it takes a little longer to grow than we anticipated. We all make mistakes. And with those mistakes come lessons that we can learn from. Today, with the market being down like it is today, after such a quick rebound, we can learn something. So always remember that, even when it's a red day and it's like, oh man, am I doing this right? Take a deep breath. Yes, let's learn from whatever mistakes that we made today. Let's learn from them, wash them clean, and move forward. I also want to say too, yesterday, you guys asked if you missed out on AMD because it was performing well. I said no. I didn't think this was we had seen the bottom yet. And that's still my theory, my thesis, my hypothesis, that we have not seen the bottom yet on this market. And that's okay. Now, we're going to dive into it. We're going to look at the charts. We're going to see what we can learn from this. And there's one thing that I want to go to. Let's see if I can. I should have pulled this up. Let's see if I can get to it real quick. And I want to lead with it as we get started. And while this is loading, just remember, we always start this video with the quick take on the market, right? And then we go through your question. So if you do have a question, leave the ticker symbol and your question in the comments, and we'll go over it live during the show. It's my favorite part of the show. It's what I love doing the most. And I just want to see here. Yes, here we go. This was from Monday, okay? So I'm going to share this right here on the screen, okay? This is the back end on Patreon, okay? This is what I get to see when I log into Patreon. This is what I got to see, and this is what I wanted to start with right here. 2 days ago, you can see the date is right here at the top. 2 days ago at 5:01 p.m., I sent a message out to all of our investors on Patreon. And it says this: prepare for another week of high volatility as the markets attempt to find their footing on the loose ground here in May. Prices saw what could be the start of a relief rally last Friday, which created a number of intriguing weekly reversal patterns on many charts. However, we are far from being out of this bear-infested woods just yet. Looking at the charts, most of the market remains in a multi-week down channel off their April highs. As well as below all key moving averages. Combined with internals and breadth readings associated with historical bear market lows, the odds favor some sort of recovery effort. But high volatility remains the double-edged sword that can cut both ways if not respected. The bottom line is we need to prepare for anything during this option expiration week, as the games, the quote games, will be in full effect to separate the unskilled and undisciplined from their money. Adam, that last line there, the bottom line, is we need to prepare for anything during this option expiration week, as the quote games will be in full effect to separate you from your money. To separate you from your money. That's what the last line is. Hedge funds are trying to make their money, and they want to do that by taking your money. So that's what I started with on Monday afternoon, evening. And then if we look at what happened this week so far, I mean, it's only Wednesday. We still have 2 more days to go. But each of the indices today fell more than 3.5%. And today is Wednesday for those rewatching the video. And what I would say was an orderly retreat fueled by profit margin concerns, or margin compression is another way to look at it. The Nasdaq totally underperformed, plunging 4.7%. It's hard to wrap your mind around such a big drop like that. But 4.7% on the Nasdaq, and it's showing me some interesting signs here. The Nasdaq is in a falling wedge pattern. That means a lot of the big cap technology companies are probably getting into a similar wedge like this. This is a falling wedge. Today's midday email was very helpful. Also, Devin, wonderful. Wonderful. I like doing those. The pre-market that I sent out yesterday and today. Today's was a little later than I wanted to get it out. But I like doing those. I like putting those together. In the midday one, I was like, you know what? It's a down day. Things are falling. Let me just send this out. And so I'm glad that it was helpful. That makes me feel really good about it. And I'm definitely going to do the pre-market. I'm definitely going to continue doing this aftermarket or post-market live stream. But I'll try to get maybe a midday note that goes out as well. Because if those are helpful and provide value to you, that's what it's about, right? That's what it is for me. So I'm glad to hear that. Okay, with the Nasdaq, this falling wedge pattern that you see here for the Nasdaq. This is the daily view for the Nasdaq. Now, we didn't set a new low for the Nasdaq. And remember, I said on the Nasdaq that there's no real resistance for the Nasdaq where it was headed, right? It was kind of like in an open space where it could rise, it could continue rising. There was nothing there. But of course, when you have growth concerns like we had today due to Walmart, due to Target, people get real antsy. But we've been saying this for a long time, that the first half of this year is going to be better than the second half of this year. The second half of this year, that's when we're going to see growth really contract. I've been saying that, I believe, since the beginning of this year. I can go back and check the archives of videos. It's out there. But this falling wedge pattern, right, didn't quite get to resistance. And it's probably heading for a new low. We have these 4 red circles here. These mark new lows for the year each time they're made. So we're probably looking for another one, which is down here. And I got to open this back up a little bit to get a little lower. we're probably looking somewhere around 11,200 is kind of where I'm thinking that the S&P 500, that's probably where it's a good place that we can mark. And 11,221 is the closest I can get right this moment. So I'm going to put a, oh, come on, work, won't you? Okay, well, 1198. That's where the line is. And I'll change the color so it's not blue like all the rest of them. Let's make it a red color because it probably stopped maybe there. All right, and that lines up with the, and it doesn't, it's just coincidence that it matches where the purple line is for the support matches. That's an area where I think that we could be headed for the Nasdaq, which again, the Nasdaq is down 26.9% year to date, so that is pretty scary. Things are falling. Oh, Devin, one thing I wanted to point out. SoFi today, I don't know if you saw it or not, but SoFi's CEO bought how many? 39,000 shares worth about $250,000. So that should bring some confidence that SoFi is sitting pretty low right now for the CEO to go out and buy 39,000 shares. That just came across the wire earlier today for SoFi, and I wanted to make sure I mentioned it during today's live stream. Why? Oh, that's why. Oh, yeah. Okay, awesome. Awesome. I'll just do this. There we go. Okay, so there's the Nasdaq. The big faller, really hard. The S&P 500, it slipped 4%, and we looked at that, but not in greater detail. So let me put the S&P back up here for just a moment, and then we'll go look at the Russell and Dow Jones. I'm going to take volume off. Volume did pick up a little bit today, obviously, with the big fall that we had. But when we look at the S&P 500 here, you know, we've had this yellow box at the bottom of the screen here for months now, and probably thought I was silly for having it there, but you know, that's sitting right about 38, 39, 38, 40, and we're not that far off from it, right? We're sitting at 39.23. That's where we closed. But I do find it interesting. This purple line, it's hard to see. It's going diagonally in the middle of the screen. It was resistance on the 21st of April. It broke through it on the 4th of May, but then on the 5th of May came right down underneath it. Resistance for the 10th of May, resistance for the 11th of May, broke through it on the 13th of May, stayed above it, and now it's stopped right on it. I think it's a coincidence. I don't think this line is going to now act as support because it's been very flimsy along the way. So I do think it's just a coincidence that it's sitting on that line right now. I do believe that it is heading lower, and you can see there's a bit of a falling wedge here for the S&P 500 too. Although the top part, I should really adjust it because it doesn't match. And look at that. When I adjust it and I put it on the tops there, let me scroll in so you can see that better. It lines up perfectly. It's almost like this is being traded using technical analysis, right? Look at that. The top of May 4th lines up perfectly. The top for yesterday actually hits it perfectly too. So that now it's not coincidence. Now it makes sense because now we're getting this falling wedge on the S&P 500. And again, we're heading for about a 38, 35, 38, 40, somewhere around there. That's where I think we're going. The relief rally that we had Friday, Monday kind of stalled out, and yesterday, you know, it's okay. When markets get oversold, that happens even when we're in a downtrend, right? And I mentioned on Monday in the note that went out to investors on Patreon about what the weekly looks like, right? And I don't really show that a whole lot on here, but I probably should. When we look at the weekly chart, okay, this is the weekly chart for the S&P 500. It looks horrible, right? Let me take all these lines off here for right now so we can just see the candles, all right? Now, the weekly chart, going to the top of our local high, not our high that we would measure to see if we're in a correction territory or a bear market, but our local high on March the 28th, when it was hit, just about the middle of the screen here, it was hit. That started our downtrend, okay? And then we have 1, 2, 3, 4, 5, 6, 7 weeks in a row of falling. 7 weeks in a row of a downtrend. 7 weeks in a row of being in the red and being down for the week on the S&P 500. This is a very strong trend, right? There's only 2 times on this 7-day area where the candle is like really flat and barely moved for the week. And that would be the week for May 2nd. You can see that would be from the last candle. If we count the last, from the last candle, 1, 2, you can see it's a very flat candle. And then I guess it would be the 8th candle. It's green, but it's also flat, and that's the top before this weekly fall occurred. So when I mentioned that weekly evidence on the chart in the investor-led note that I sent out on Patreon, this is what I'm looking at. You can use weekly charts sometimes better than other time frames to see an overall trend, right? I like using the daily chart. Weekly charts are definitely useful for seeing big trends. And we definitely can see a big trend for the S&P 500. Now, let me just put the Nasdaq up here right quick, and you can see this. I'm going to leave it on the weekly view, and you can see, again, March 28th was the top, our local top, and then we have 1, 2, 3, 4, 5, 6, 7 weeks of red. There is definitely a trend that has not reversed yet. The really only reversal that we had, and it was temporary, but it lasted for a little while, was the snapback rally that we had at the middle to end of March. Those 2 weeks, when we had the death cross occur, and then we snapped back. That's the big green candles that you see. The last 3 green candles we've had in over a month, right? Nearly 2 months. 7 candles, that's 7 weeks. That's nearly 2 months of more lows and making more lows. And again, I don't think we've seen the last one yet. Because if you go back and you look here on the weekly for the Nasdaq, and you look at where we are right now, that red line comes over to this area here. Is my head blocking it? No, which way? Right here, where I'm pointing, right at the tip of this chart. That's where the Nasdaq is currently sitting, right? That area should start to find some good, solid support in there, okay? And if actually, I gotta adjust the chart here a little bit. All right, there we go. So you can see where it closed today. That puts it right at the top of these two peaks back here. This would be August of 2020 and October of 2020. There were two peaks right here. These two peaks should start coming in and acting as support for the Nasdaq, right? But the real support for the Nasdaq, and this is the area and why I think it could go to 11,200, is underneath these two peaks. And I don't know if I can draw because I got everything turned off. Maybe I can. Right? Go figure. Okay, let's try to hide some of this. Technical analysis can be great, right? But sometimes your own minds get in the way. Okay, so where the Nasdaq, this falling wedge is happening, the red line that I put here, right? If we go back to August to October, this area that I'm kind of filling in with red right here, that right there should be support for the Nasdaq as it continues to fall. And that's right around the 11,200 area. Now, it won't be perfect, right? Technical analysis is not perfect. Sometimes lines, candles can dip below an area a little bit or not quite come down to an area that you think. But this looks like a good area of support for the Nasdaq. And right now, if we were to measure today's close, okay, down to that red line, we're about another 6% away from that line. And that would take the Nasdaq down about 32% from its high hit on, let's see, when was this here? December 27th for the Nasdaq. Oh, but this is the weekly count. Okay, so we're about 6% away from that red line. And this weekly chart, again, this gives you a really clear view of the trends for the Nasdaq. Okay, let's go back to the S&P 500 here right quick. Oh, that's not it. There we go. S&P 500. Okay, so both of them hit hard, dropping over 4% today. And again, for the S&P 500, the reason I have this line here is, again, there's a little area of support right here on that red line, right here. And that area of support is where I think could catch the S&P 500 as it continues to fall. And that's why I'm using that area right around 38.35, 38.40. That should be a good area that should have some support. Okay. All right. Boy, we're just getting started with this. Okay, so there's the S&P 500, the Nasdaq. That's really what we've only talked about so far. My goodness. All right, the Dow Jones and the Russell 2000 both dropped about 3.6% today. Now, Target had a lot to do with this. Let me go back to the daily view, okay? And let me pull up Target. Remember, you can do this at home. There is a link in the description for TradingView, and you can sign up for a free account. Ticker symbol is TGT for Target. Target is in Walmart. Those are the two culprits for today. But look at Target. When has this happened in recent memory to Target? That Target dropped 25%. When has that occurred? When did that last occur for Target? That it had that big of a drop. Even March 2020, Target didn't have a drop like that. I mean, look at this. Now that I've got the chart bunched up a little bit, this is where target was, this red line right here, okay, that area. This is where target is now. That is an incredible drop for target. So this 25% drop in target. Target was the main culprit today, after the company missed EPS estimates amid elevated cost pressures that it expects to persist for quarters to come. So if the stock market is nothing but a measuring tool for how companies are going to do in the future, and Target comes out and say, hey, we're going to be under pressure with these higher costs because of inflation for several quarters to come, what's the market going to do but go down? Very easy to understand why it came down today. I noticed SoFi has been killing it this week. Yes, it has. Even today, with all of this negativity, SoFi still managed to put up a gain today. It's awesome. Okay, so a big drop in target today, and they're expecting this this margin pressure, cost pressure, wage pressure, input costs from every direction. And when you have big retail like Target and Walmart saying, hold on, wait a minute, we can't pass these costs along to our consumer because they won't pay it, then we got a problem. Because if Target and Walmart can't pass along their inflated costs, then every other company around has got a problem. And especially companies that cannot pass their cost along to the customer. Those are the companies that would get hurt the worst. And that's why we see tech falling so heavily. Now, Target doing this, like I mentioned earlier, was just like Walmart yesterday. Walmart continued falling today. Ticker symbol is WMT. Oh, wrong. What did I just do? I have no idea. Got to get my cursor on the right place. WMT, Walmart's ticker symbol. Okay. Walmart, big fall. It was down 6.79% today. And that's on top of its big fall from yesterday of 11.3%. Okay. So we've got these two big behemoths, especially Walmart, in the industry saying that, man, costs are just getting too high and we cannot pass them on to our customer. What do? It's invoking a belief that if these high-profile consumer companies are struggling in this inflationary environment, then the pain could be more widespread and possibly lead to decreased consumer demand down the road. And that's what I've been saying. The second half of 22 will be worse than the first half of 22. The first half of 22, we've had a strong consumer. But the consumer is weakening right now. The consumer cannot continue to pay these high prices. You and I, we cannot continue to pay for these high prices everywhere we go, everywhere we look. The high prices are now hurting the consumer. The consumer will become weaker in the second half of 22, which in turn will hurt companies' earnings, which in turn will cause the stock market to go down. Now, the stock market will try to price in these lesser earnings beforehand. So that way, when these lesser earnings come around, the individual stock price should be lowered to what is expected And then if, prices, if earnings suffer and it's on par where they think they're going to suffer, then, the market will be okay. And if there's a surprise to the upside, well, that's just going to help the market to rise, to rally. Now, even though I do report data as it comes in, all the economic data, and some of that data can lead to one believing that the economy is currently strong. I heard Meet Kevin, I don't know, maybe it was a week or so ago in a video, and he was talking about the consumer being strong. The consumer was strong in the first half. The consumer is weakening right now. And the consumer will be weakened in the second half of 2022. That is my belief. That's what my hypothesis is, right? That's where I believe the market is going. The economy is headed. I mean, we could be in a recession right now and we technically wouldn't know it. And this could end up being, maybe this is a 3 or 4 quarter recession. It's a possibility, especially since we entered the recession earlier than I thought, with the first quarter contracting. And that was with a strong consumer. That was with strong labor force. And typically, you need a weak labor force. But we had a strong labor force and we had a strong consumer in the first half. The second half is going to look totally different. Now, I don't want to keep just going around in circles on this, but I did share with investors on Patreon this morning that Target and Walmart's reports are a stark example of the profit margin pressure most companies are facing due to high inflation. And it has stoked concerns about being stuck in a stagflation environment. And that would be an environment with little to no growth and persistently high inflation. And unfortunately, persistently high inflation, I think, is going to be here. I think the inflation is going to hang around for a while. We may have seen peak inflation, but I don't think we'll see inflation come back down. I think it's just going to hang up there for a while, which is an environment that the Fed has suggested it will keep raising interest rates in, because its priority is to get inflation under control. It has 2 mandates: get inflation under control and max employment. That's the Fed's mandates. The Fed's mandate right now is not to prop up the stock market. That mandate has been revoked. And that's why the market can go down. That's why the market has been going down. But a 20% drop in the S&P 500 isn't going to spook the Fed to come in and take any sort of action. So don't think that they're going to be there for you. Not this time. They will not. Now, the underlying concern is that such an approach will ultimately drive the economy into a recession. Neither situation, stagflation or recession, is good for earnings growth. That is partly why there has been some sharp multiple compressions happening in the market since the beginning of this year. Now, just a real quick plug. If this is the type of information that would be valuable to you along your investor journey, then I'd welcome you to join us by clicking the first link in the description. Okay, the S&P 500, consumer discretionary, it was down 6.6%, and the consumer staple is down 6.4%. They were by far the weakest sectors today, both losing over 6%. Information technology sector down 4.7%. I forgot to say that. And it was another important underperformer since it's the most heavily weighted sector in the market. Now, the defensive oh my goodness, I can't believe I'm getting this mixed up. The defense-oriented sector, which is the utilities sector, which actually traded higher intraday, eventually turned lower as there remained a lack of buying interest into the close. Buyers were largely on strike amid the inflation-induced growth concerns, while investors braced for further downside, as shown by the 18.6% pop in the VIX. And we can look at that together. VIX, use the CBOE. Has the Fed lost credibility in your opinion? Yes, the Fed lost credibility months ago. Absolutely. The Fed lost credibility months ago, and that's one of its problems. The market can't trust what the Fed's going to do. And that's what's bringing these big volatility swings. Okay, did I click on it? There we go. So yeah, just to real quick answer your question there. Yep, the Fed has lost credibility. It lost it months ago, and it's having a hard time getting that credibility back. Okay, on the VIX here, we can see that typically when the VIX falls down below 22, above 20, so 20 to 22, we typically see a reversal. That's what we've seen for the past 2 years. That's like the low that it typically trades in. And then it gets above 33, and we know that a reversal is coming. Well, it looks like there's another area that wants to start to form, and it looks like it's right about here, right? It's only 2 lows that are connected there, so it really doesn't make up a lot. And if I come over here, then it just doesn't line up at all. So maybe, the VIX is getting hung up here around 25 or so points, which isn't good because we need the VIX to come back down below 22 to keep that momentum moving in the direction of further gains. So that's the VIX. It's now nearly 31 points. But this was a big move, and we've seen these big moves before. I mean, the last big move up, well, down on the market, but up for the VIX was just on May the 6th, and, there was another big one on May the 5th. So we've seen these big moves before. Now, it is interesting that does close back above this ascending trend line here. I'm curious to see if it gets in here and maybe there a wedge pattern shows up. That would be interesting if that occurred. With the falling wedge pattern that we're seeing in the major indices right now, and then if we saw a wedge pattern here, I don't know if that would be a good look, But then again, it could signal that, hey, we are finally almost near a bottom. So that's what I'm looking for. I'm looking for signs of bottoms, We've been falling a lot. Okay, let's see here. Let me just take that out of there for just a quick moment there. Okay. Cursor back. All right. So higher costs and affordability issues also presumably contributed to the 3.2% month-over-month decline in building permits for April. That was a pretty big drop. Building permits. We need more homes in America. We need more homes built. We don't have enough homes. That's half the problem with the housing market. High demand, low inventory. Pretty simple. So when you see building permits falling for an entire month, that's not good. You need the building permits so you can complete the homes. But we also saw an 11% drop in the weekly MBA mortgage application index. An 11% drop. And I can contest to being priced out of the market. You know, my wife and I, we had our approval loan. We were ready to go. We just needed to find the right house. But now we've been priced out of the market because of low inventory. House prices going up. And the big thing right now is the fact that mortgage rates, they're on a rise. They're approaching 6%, I believe. I think they're going to 10%. But that is a great big problem in the housing market, because as mortgage rates go up, that prices more and more people out of the market. Now, on a related note, the EIA reported an unexpected draw in weekly crude inventories, but oil prices still fell by 2.6% today to $109 a barrel. You can look at this. You can type in WTI crude, or you can type in the ticker symbol USOIL, US oil, and you can see it. It's fallen even further since the close. And we talked about this just yesterday during the live stream. Oil was up here at resistance. And then what does oil do today? It falls. It falls. And it closed at $109 a barrel. And now it's down another 0.5%. I do find this interesting. Is it going to go back down to $100, $102 a barrel before returning and going up again? Because that's where support is, and that's kind of the motion that it's been on for a while now. So I'll be curious to watch that one. Usually if oil prices are coming down, that helps the stock markets go up. But we were amid de-risking and profit-taking efforts all day today. Now, in other earnings news, and this one was a bit of a surprise, Lowe's, ticker symbol LOW. Put Lowe's up here. Lowe's fell 5.2% today, and it was pulled down even though it beat on EPS by 9%. And revenue, it missed by $105 million, but that's not even 0.5%. So that's basically what you would call in line. So Lowe's fell, I guess I could say, in sympathy, maybe, with Target and, of course, the broader retail space, despite beating EPS expectations. Now, there was one outlier in retail dropping, and that was TJX, and that's the ticker symbol, TJX. It's TJX companies, TJ Maxx. They were up 7% today. It was a bright spot in the market or the sea of red. And they reassured investors that its profit margins are healthy, with an improved pre-tax margin outlook for fiscal year 23. And they're a discount retailer. So that's interesting. It makes me want to check in on other discount retailers. And then we had a troubling sign develop in technology with Cisco. Cisco has been in kind of a up and down, negative news, positive news. This time negative. CSCO, is Cisco Systems ticker symbol. Now, they missed revenues by a pretty wide margin, almost 4%, $532 million. EPS flat. But this was a larger than usual miss. And the slight beat in EPS, or what I would say is flat or in line, it was decent, but it was smaller than the previous 2 quarters. I think the guidance is the primary reason this stock is down as much as it is. It fell 4.4% during regular session. Then their earnings were released after the market closed, and they're down 12.8%. Now, Cisco is known for being pretty conservative on guidance, but these numbers are well below expectations. So it seems more than just sensible conservative guidance. Now, Cisco is the first big tech name to include the month of April in its report. That's what I find so fascinating. It's clear that the COVID lockdown in China is likely to affect many tech names. So brace for weak numbers from other equipment makers in the tech sector. Okay. Here's a bright spot, I'll put it. Aurora Innovation. I occasionally bring this one up. AUR is the ticker symbol. This is a company I like. I think it is a pure play on autonomous driving, right? And this thing has fallen since its merger pretty far. It had a nice run when it went public there. But, you know, it's been falling. And practically over the past quarter, it's really been flat. I mean, yeah, the one rally and then it bled out. But the bottoms are pretty close to each other, pretty close. But besides the point, the reason I wanted to bring up Aurora as a bit of a bright spot is because there was news. See, I think autonomy is going to help this supply chain mess that we're in greatly. Especially, well, because I guess one of the reasons, human beings who become truckers, right? Well, truckers are human beings. There's no, I don't know why I said it that way. But truckers, when they're driving, they're only allowed to drive for a certain amount of hours, right? And then they have to pull over and rest. And that's fair because you need your rest. You're not operating 100% when you're tired. But Aurora, creating self-driving tech, is partnered with FedEx in Texas. And they've been running experiments and testing out their software and their vision and everything needed to be to have autonomous driving. Well, after the market closed today, Aurora came out and announced with FedEx that there will be an expansion of their pilot program to autonomously move FedEx shipments on an additional commercial lane in Texas. See, in Texas, these trucks are allowed to drive on the road autonomously, but they need a safety driver in the vehicle at all times. So it's not just an empty truck. And since the commercial pilot began in September of 21 with Aurora and FedEx, Aurora's deliveries of FedEx shipments between Dallas and Houston have been 100% on time. 100% on time. See, I think these machines are going to be safer on the road than humans. because they don't get distracted. We do. Even if it's just for a second, we get distracted. So I think this is a good thing for safety for sure. So in March of this year, Aurora's next generation autonomous trucks, which is based on what is called the Peterbilt, which is a manufacturer of big truck. It's the Peterbilt 579, I believe it is. You can fact check me on that number. But they began to transport FedEx shipments between Aurora's new terminals in Fort Worth and El Paso. And Aurora is making the 600-mile trip on a weekly basis with safety drivers, of course, on board, and expects to increase the frequency of trips in the coming months. Aurora continues to move shipments for FedEx between Aurora's South Dallas terminal and its new Houston terminal on a daily basis. So this is one I really, really like. Obviously, it's a speculative play, but they are working hard, and I really like their tech. I don't know if it's time to dive in to buy this one or not, but once the market stabilizes and there is a bottom confirmed, it's one to dive in on for sure, I think, in my opinion. Everyone's got their own. And of course, we had some nice gains today. Like SoFi had a good gain today, SoFi. SoFi has just been on a roll the past several days. 2.5% is what it ended on today, but I mean, it was up over 750 earlier today. It had a nice nearly 20% gain on the 13th, last Friday. So this thing SoFi has been moving since earnings, which is nice, and it's kind of unexpected because there have been some of these smaller cap companies that, even though the market's been going down over the past few days, even the past week or maybe 2 weeks, a few of these small caps have started to do good. And I'm wondering how much retail is having an effect on this. So just something to keep in mind. There are also solar companies that are doing pretty well too. Array Technologies, for example, ticker symbol ARRY. They're pretty good too, and they were up 7.4% today. They were up 14% yesterday, and they had a 2% down day, up 14% for a second day there. So they've been rolling too, but they did break above their resistance area here today. So I'm not sure if that's going to last, but there's been several solar companies that have been doing really good. So yeah. Yeah, so if you like solar, there's some solar companies to keep a watch on. Okay, now the inflation narrative today, of course, it maintained rate hike expectations, which nudged the Fed funds rate sensitive 2-year yield higher by 1 basis point. You can look at the 2-year US 02Y, and you can see the 2-year. It popped by 1 basis point, which is 0.01%. So barely budged, but it's at 2.6. Round that up to 7. That's where it sits right now. But the big one, the one that is sensitive to not the Fed fund rate, but is sensitive to growth, economic slowdown, and inflation, which is the 10-year. Now, the 10-year yield, and you can look at that US 10Y. Well, this one fell today by 8 basis points to 2.88%. among growth concerns, which I got to say, we're on hiatus yesterday. And of course, safe haven interest, because growth concerns were back in full swing today. And they were missing from the market yesterday for some mysterious reason. Yet to find out why. Now, almost ready to wrap this one up. On the economic front today, we briefly talked about total housing starts. They declined 0.2% month over month in April to a seasonally adjusted annual rate of 1.72 million units. Building permits decreased 3.2% month over month to 1.81 million units. I think the key takeaway from the report is that building permits, which is a leading indicator of homes being built, were down month over month for single family homes in every region. Usually there's a region or two where, it remains high, but down in every region, underscoring the hesitancy on the part of builders to construct new units in the face of these higher costs for labor, higher costs for material, and rising mortgage rates that have created affordability and demand pressures for buyers. The weekly MBA mortgage application index dropping by 11%, following a 2% increase last week. Cracks are starting to form in the foundation of the housing market. I believe so. And I believe the housing market will come down a bit as we get to the end of this year, even as we get into the second half of this year. Now, looking ahead, there's some economic data that comes out tomorrow. We get the weekly initial claims and continuing claims and the existing home sales for April, which will be interesting to see. All right, here's where we stand year to date. The Dow Jones is down 13.3% year to date. The S&P 500 down 17.7% year to date, knocking on that door of bear market territory. The Russell 2000 is in a technical bear market now, down 21% year to date. And the poor old Nasdaq down 27% year to date in bear market. Now, if you learned something new today, could you do me a favor? Click that like button. Share this video wherever you can. And what really helps out the channel is you subscribing. And of course, if you like this perspective, if you like this type of information, if this information would be helpful on your journey to becoming a better investor, the same journey that I am on, then click the first link in the description and join us on Patreon. A lot of good information. We're always finding, I guess I could say, new ways of providing value. All right. If you have questions, now is the perfect time to ask them. Otherwise, we'll wrap this segment up for today. I know it was a red day, tough day in the market, but I think we found some clues to answer the question of why the market fell today. And it had everything to do with growth concerns, selling into strength, and investors just wanting to or traders, I should say, wanting to keep any gains that they had made over the past couple of days and not lose it. Because look at the 5-minute chart here. If you're getting any questions ready, I'll look at the 5-minute chart here. If you look, I mean, today, there were no breaks in the day, right? We had a gap down this morning. I'll turn the volume on, easier to see where the days end and begin. Gap down this morning, and then it was just a steady, nice and steady sell-off all throughout the day. I was hoping we might get a little bounce here at the end because there were these 2 green candles that I was watching as the market was closing, and they just couldn't quite break through, and we ended on a small red candle. The worst thing is 10% big guy B is sleeping when babies and small guys crying. Inflation was expected bad, but this much worse. No way. Nowhere yelling to, no hope at all now. That is a pretty dreadful view for sure. And the market could be going in that direction. But there's a bottom somewhere. We haven't found it yet. And there's more room to fall. But we'll find a bottom somewhere. At least that's, I hope we do, right? Because we've always, found a bottom in the past. So just trying to keep it positive, I guess. I know it's tough when it's like this. And especially when, you look around, what is the Fed doing? What is Congress doing? Are they helping? Are they making matters worse? There are questions to be asked for sure. Where is Tesla safe? Down to 700 after hours. I'm thinking of backing the truck up. Okay. Let's pull up Tesla. TSLA. I know Tesla is safe at 550. Let's see what we can find here. Let's take the FUD away. All those lines makes it scarier looking. Okay, so if we're looking at where Tesla's at right now, 700. Look at the. I know it's tough to see. Let's see. I can get the drawing tool out. I think it let me. Where Tesla's at right now. Oh, that's right, man. I wonder if there's a. No, that doesn't work. Okay, this works. I'll just use a different country to look at Tesla, but the chart is the chart is the same. If I do this, okay, the chart's a little different, but it's almost the same. I'm just using a different country to look at it. Slightly different, but it's pretty darn close. So if we look at where Tesla, just ignore the numbers. We're only looking at the candles here. So if we look at where Tesla's at now, this line right here, mine's a little curvy. You can see we had resistance back here in February of 2021, right? And if we look at that and we take, let me keep the drawing tool here. This area right here. Oh, come on. I'm going to tap it again. This area right down here, there is support for it. And if we measure where we are now down to that support area, wow, that's 30%. That is incredible. Now let's go back to the other, the actual Tesla one. I'm going to take my drawings away. All right. So if we measure to that spot, and that spot, it's right here. And where is that? $570. Yeah, really close to the 550 that I said before. So right now, Tesla is in its space. If we go down to 570, which is right there, that's another 20% drop Tesla could could have. That's a big drop. But for a company that has risen so fast in such a short period of time, they're down 32% year to date. They're still up 25% over the past 365 days. I know that's a big, bold statement to say that, well, Tesla could come down another 20%. That's where the chart says it could come down to. $570. There is support right there for Tesla. And again, that's back here. You can do it on your own chart, and you can see these lines. You're going to look for the 24th of May, the 17th of May, and then the 1st of March. Is that May? Hold on. No, yeah, May. I'm right. So the 17th and 24th of May, and then the 8th and 1st of March, and then also we've got the 30th and 7th of December of 2020. Those three areas were support for Tesla, and that's between that $550 to $570 a share, which is another 20% or 19.5% drop from where Tesla is right now at $707 a share. I know that sounds scary, but and like, no way that could happen, dude. That's what the chart looks like. So yeah, but there is, I would say, a zone, because we can look at where Tesla is right now, where it closed. Move that out of the way, where the bottom candle is, and we come over and we can see there was resistance at this $700 area. And then back here, there was a little bit of support and a little bit of resistance at that $700 area. And then if we go back further, we have support at 700 right here on January the 1st of 2021. So if it breaks that 700, then it can easily go to $550 to $570. And there's three areas on the chart where that was support for Tesla. So it's in a zone right now. $550 to $700 is a zone for Tesla. Politicians are busy visiting Ukraine for their pockets. What do you think Ray Dalio sold Tesla and bought AMC, GME, the meme stops? I do think that's interesting. Me personally, I do not own AMC or GME. I do own Tesla, and I do plan to buy more Tesla. Hopefully that doesn't say anything negative. Let's see here. Sounds like I should maybe start smaller. Save the truck for later. I like 700-ish as a possible bottom, though. Yeah, I would take this. You know what? You guys remember when I was talking about 2022 and how to invest in this bear market and what's worked in 2022 before? One of those thoughts that I shared with you guys, one or two live streams ago, small positions are important right now to limit your risk, because you don't know when the market's going to flip and fall 4%, or individual stock like Tesla 6.8% in a day. So open up small positions at a time and just slowly inch your way into it. Because I don't know if I do know this is not a V-shaped anything. Okay, when we go look at the SPX again, oh, I gotta get the cursor on the right screen. SPX here. When we look at what the year has looked like so far, this is not going to be a V-shaped anything. Okay, this is going to be a I don't even think it's a U-shaped. It's more like I don't know. But once we do find the bottom, I guess what I'm trying to say is once we find the bottom and this market stabilizes, you will have time to get into the positions that you want. You might not get them at their bare bottom, but you will get in at a decent point once this market bottoms and stabilizes, and it will probably stay low for a while. I mean, you may have your still volatility, but this trend, right? This weekly trend should start to reverse. And that's when you know it's safe to go ahead and back up the truck. Hope that makes sense for you. Let's see here. It's war against Musk. Think about Gates, Soros, Biden to hack Tesla because of Musk. Yeah, I do think there is definitely politics at play. Musk is, I think he's trying to do things in good faith. I mean, he definitely has with his previous businesses, so I don't have any reason to doubt any good faith that he's putting into anything that he's doing with Twitter right now. I do think he's trying to get a lower price for Twitter. And if he can expose that, Twitter may have more bots than they say they do, then, he should be able to get a lower price for Twitter, which doesn't work out perfectly for the shareholder. But it does work out overall, because then you get rid of those. Hopefully you can get rid of those bots on Twitter and have a cleaner platform interface, whatever it may be. 224, 913 for 700-ish, but I'll hold back. Thank you. You're welcome. If Musk announces good news, Tesla will go up like crazy. Yeah, it will. Yeah. If Musk comes out and has something positive to say about Tesla, I mean, it could be anything. It could be delivery numbers exceeded expectations. It could be they have solved some sort of battery issue. Self-driving has improved in some way. The robo-taxi thing is going to happen sooner than they think. There are a million different positive things that Elon could say about Tesla. The Powerwall. Now the batteries hold twice as much as electricity as they did before. So there's a lot of things that Elon Musk could come out and say to get the price to just boom shoot up to the stars. But I do think some of the pressure on. Why do I keep hitting tapping on the wrong screen? I do think some of the pressure on Tesla right now has to do with the fact that Tesla was kicked out of the S&P 500 ESG fund, which is just mind-boggling to me. Why would you kick out the leading electric vehicle company in the world out of the ESG fund for the S&P 500? I don't know, but that's the FUD that came out today, and that helped to send the stock down a bit sharper. But man, It just doesn't make sense to me. So I can agree that maybe that move was probably political and had something to do with Twitter, but I don't know about that fray of the world. So I'll stick to my lane and talk finance. Says more about the fund than Tesla. Absolutely. Absolutely. And that's why I think it was probably more political than anything else. But you know, that's that. All right, ladies and gentlemen. Well, I guess we'll wrap it up here. We've been going for a good time now. Any final questions? Load them up. Otherwise, I'll see you tomorrow after the market closes, and I'll try to make sure to work on the timing of the pre-market, and I'll see what I can't do for the mid-market insights. And then, of course, we've got the post-market insight as the live stream. So, yeah. And if you're curious about that, if you're wondering, we are starting to do a pre-market analysis or pre-market insight that goes out to all of our investors on Patreon. We do the post-market insight, which is the live stream here. And then I snuck in a mid-market insight today, and it seemed to be helpful. So I'll see if I can't try to work that one in there as well. Just whatever value that I can provide, that's what I want to do. So we'll keep listening, keep engaging, keep learning, and we'll all become better investors because of this little journey that we are on. You are welcome. Fingers crossed for a green day tomorrow. Absolutely. Absolutely. Tomorrow, it would be great to have a green day tomorrow. But I'm not so sure. So I guess I'll keep my fingers crossed, be logical, be realistic about my expectations for the market, where we're headed, what it looks like. But yeah. Okay. Thank you guys so much for joining me today. I greatly appreciate it. I'll see you back here tomorrow after the market closes, and I think I have a video coming out later this evening or tomorrow morning. I can't remember when it was scheduled for, but I got another video, standalone video coming out. So check that out when you have some time, and I'll see every one of you tomorrow after the markets have closed. So have a good night, and I'll see you in the next video.